Robinhood trying to avoid going 2 for 2 on trading days in the red. You can see shares off by about 1.5%. Coming off its worst day one performance, the worst ever day one performance in history for an IPO of its size, falling 8% in its debut. So where does it go from here? And what could it signal about the strength shaking now in the IPO market? And for more on that, I want to bring on Bullpen Capital General Partner Duncan Davidson back on the show with us today. And Duncan, good to see you again, man. Good to be chatting here. The hype was real. The hype was real for Robinhood, so just want to get your thoughts on this one first because it was pretty weak. Of course, there are a couple swing factors with retail investors getting a certain chunk, about 30% allocated to them in this. But what's your takeaway about what it means?
Well, I think it means we may have the top in meme stonks. As you know, Robinhood grew on meme stocks or stonks. This may mark the top, just like Coinbase going public marked the top of Bitcoin and crypto. So does it mean anything for the broader IPO market? No. We had 5 other terrific IPOs this week, all did really well. Robinhood's the outlier. So let's not worry about IPOs.
Duncan, you're already calling Robinhood a meme stock, is it? It's
well,
just
yes.
day 2.
It is, but it grew on its own meme stocks. It's a meme stock, and this may be it for meme stonks. We'll see. It may be just a momentary top. Look, Robinhood's a terrific story, no question about it. They've got a huge audience. They kind of took the sophistication and complexity of stock trading and turned it into a game, a Wheel of Fortune, if you ever played Robinhood, which is okay. They got a huge audience, but it works really well with certain types of stocks and not with general trading. So if they throw a damper on meme stocks, it might throw a damper a bit on their growth.
We gotta hit that over under here on how many times we can say meme stonks during this segment. But when we look at kind of what investors have been putting their emphasis on, there are a couple different ways this one could have gone. Because earlier in the week we saw some consumer-facing products, which has been the trend. If you can show growth, maybe the investors care less about profitability here. Duolingo and Traeger both seeing some pretty big pops. That's a language learning app and a smoker company, barbecue grills. And when you step back and look at it, this has already been a pretty hot market for IPOs. So, maybe a little surprising to see Robinhood, another consumer-facing one, struggle here. Granted, the valuation might be a little bigger than some people give it.
Well, I think you got it exactly right. Same thing with Coinbase. There was a huge hype around Coinbase. It has a lot of great cash flow and there's a good story about it. But it went out at too high a price and it's corrected. So Robinhood may have gotten too meme stocked up and it'll correct down to a reasonable price. I have nothing wrong with the company. The company's in great shape. It's just the stock. You're buying a stock, not a company, and this stock was overpriced.
There was a lot of talk yesterday, Duncan, about the structure of the IPO and whether, in fact, other companies would be looking to expand their allocation or typical allocation for the retail side. It certainly didn't go well for Robinhood, at least in day one. But are there larger implications on that front, or you think it's a very Robinhood-specific story in terms of other companies looking to maybe allocate more exposure to the retail side, given how much that has grown?
Well, there's a possibility Robinhood got too cute in how they allocated, and therefore they took out a lot of the retail. The aftermarket buying that might have happened otherwise. But I actually think this is a deeper story of the meme stock issue as opposed to a fundamental issue. And that's why I think the market's correcting it. So,
and Duncan, we chatted with we chatted with the CFO of Robinhood yesterday, Jason Warnick, about kind of what this company is. You can compare it valuation-wise against some of the other brokerages. Granted, it's growing a bit quicker. But he told us it was a tech company first. Just want to play what he said, ask you a question about it on the other side. Take a listen.
We're a tech company first. And we're incredibly lean. We just have a little over 2,000 employees, and they've accomplished and built so much in these first 6 years. And I think that by using technology and innovation, we'll be able to continue to disrupt, the financial system in a way that's really positive for broad retail participation.
So just getting back to kind of where we're expecting to see the enthusiasm in the IPO market for the rest of the year. You can make the case that Robinhood is a tech company, though it's a little bit maybe rare to see a tech company come out and say, Q3 could see revenues actually decline quarter over quarter, because normally tech companies are just ripping. They're all focused on growth. So, when you factor that in, A, maybe is it fair to say Robinhood is indeed a tech company? And then B, what do you expect to see as we kind of continue here in 2021 about where the biggest day one IPO pops might be if it continues to be in maybe the tech side?
Well, it certainly is a tech company. And yeah, you live with the stonks and you die by the stonks. No more stonks today. But the thing about it is they have a huge constituency of millennials and Zoomers that are very hard to get into financial services. And they are probably one of the best positioned to become a challenger bank, or what are you going to call the new fintech. They can offer so many other services to their customer base so quickly, which is probably why it's best to think of them as a tech stock. Like Duolingo is a tech stock way of doing language learning. These people are a tech stock way of doing fintech. And it's a huge challenge to the incumbents. They have so many ways they can just go after their markets with more efficiency and more transparency. So I think Robinhood in the long run is greatly positioned to be a powerful company.
Yeah, and like all the other tech stocks currently, regulation still a bit of an overhang here. We'll see what happens, what the SEC eventually wants to do with payment for order flow. But Duncan Davidson, Bullpen Capital General Partner, always good to have you on, man. Enjoy the weekend. Thanks again.